Yeah, there's a reason why there's so many people that live in California.
Yeah. And so many people now devastated. And
so it's a huge impact. So like I said, our condolences to those who have lost loved ones, those who have lost their homes. So I know it seems empty when you're going through something to say, it's easy for you to say, but truly I am praying for those who are impacted. So I want to make sure that we acknowledge that before I go on and talk about money and about insurance and about impacts of major things. I want to make sure we get that kind of dealt with up front, first and foremost. But I was on a call actually today, and they were addressing this because this is something I had a meeting with a group of agents earlier this week, and this comes up, right? Like, how is this impacting insurance companies? My wife was she was like, hey, I was reading an article about how insurance companies are going to fail because of the payouts and whatnot. And so I think it's something that weighs on people. Like we go like, man, I'm and this is maybe the part of me being an insurance agent. Like you see something like this happening, you're like, I'm so sad and I'm sorry for those who are impacted. And then we go right into like, how does this impact the insurance industry? How does the insurance industry respond to something like this?
Yeah.
So I think that's something interesting to talk about.
Yeah, no, for sure. And I think especially in the most recent couple of months, you think about how many disasters, like major disasters have happened over our states, from Florida to then the East Coast just a couple of weeks ago was freezing apparently.
Yeah.
And so think about like how many claims and disasters are being paid out. And so like you mentioned, there's the loss aspect of everything that's going on for people that are in it. And then everyone else is like looking at all these disasters going, how are insurance companies going to deal with this? How are they going to pay for it? Are they going to go under? Are they not going to go under? And then what is it going to do for my insurance cost?
Well, actually, I think those are great questions to think about, right? Because it does have impacts. So right now, like the estimates are like all over the board, and they're huge variables. So the amount of financial impact or the amount of payouts for claims, they're estimating it between 50 billion.
Yeah, I saw
and
that.
200 billion. So like that's
there's a 200 billion.
200 billion is like the top end of the estimate that I've seen, which is insanity, right? Like that's so much money. It's hard to fathom how much money that is. But just for, I did a little check on like the biggest impacts, adjusted for inflation. This was through 2023 and inflation numbers because wouldn't work for 2024, but like the top 5 insurance events of property damage coming. Well, we'll start lower. Number 5 is Hurricane Maria in 2017. The estimated loss was $40 billion.
Wow.
So it's a fair amount of money.
That's number 5
That's
on the
number
list?
5. Number 4 was Hurricane Harvey in 2017 as well, which was $43 billion. So that was a bad year for the insurance industry. Number 3 would be the 9/11.
Wow.
So the estimated loss from 9/11 was $43 billion as well. It must have been just slightly higher than Hurricane Harvey. And it's interesting, that 9/11 did have a shift and change in insurance because terrorism was really not a thing as far as insurance coverage. And so some people complain now when we do a business policy, they're like, why am I paying this TRIA? It's the Terrorism Insurance Act. And it's like, well, because of 9/11, now this is something that's being put on all of the policies if something like that repeats so that there's coverage for it. But so it did have an impact. Number 2, not stateside, but still globally an impact was the earthquake and tsunami in Japan in 2011. That was $45 billion.
Wait, so these are in the world?
Yeah.
And the majority of them have happened in the US.
Yeah. Yeah, the majority.
That's interesting.
Yeah. And the number 1, if you want to take a guess, take a guess what you think the number one most costly from an insurance perspective payout property damage.
My initial thought goes to Katrina would be the top.
Yep. It is Katrina, $96 billion.
Okay. Yeah.
So it was
and that
massive.
was devastating.
Yeah. 2005. That was right when I started in insurance. 96 billion.
And what was number two? 53? 50?
Number two was 45.
45.
Yeah.
And doubled.
Yeah.
Wow.
Two honorable mentions, though, that were just outside the top five. So they'd be like 6 and 7, which I think I want to talk a little bit about today, would have been Hurricane Andrew in 1992, which was 36 billion. And then 1994, the Northridge earthquake in California, which was also about 36 billion. Adjusted for, those are adjusted for inflation numbers.
Right.
But I think that those things it's interesting because I think first off, when people see something huge like what's happening in California now, if it hits that 200 billion, it's going to far surpass Katrina, right? But people sometimes go like, "Oh my gosh, like the insurance world is going to fall."
Mm-hmm.
And I think it's interesting just to put it in perspective, right? Like we have had major things happen with Katrina, just for inflation, and then even Harvey and Maria, which were both, Maria hit Puerto Rico and the Caribbean, but Harvey and Maria both being in the same year at over 40 billion apiece, that puts you like 90 billion.
Mm-hmm.
And so it isn't new to insurance companies to have massive claim events.
Yeah, that is interesting.
So
it feels, when it happens though, it feels like shocking or feels unnerving.
Yeah. You're like, oh my gosh, what is going to happen now?
Yeah.
And when you see, I think fire, especially because it goes on for like a hurricane, it hits, it comes in last night and then tomorrow we see the devastation.
Yeah.
The fire, it's burning for days and days and days. And there is something too, just about seeing, the skyline lit up with a wildfire going through LA area. You're like, oh my gosh, the Hollywood sign's like on fire. Literally.
Yeah.
It's,
they are surreal. Like you said, it's a longer lasting, feels like. And so the impact, you're just watching it. And as you're watching it, you're just seeing the property loss continue.
Yeah. You just go, where does that end? Right. Like it just keeps going. And, it's scary. It can be really scary. So I think just to start it out, I think I wanted to just kind of frame it a little bit of just like, it's happened before. It will happen again. And the insurance industry they're always changing and adjusting. And I think that's something to be aware of, that whenever you have defining claims moments like this, which is why I want to talk about Northridge and Harvey a little bit, because when you have defining moments in insurance history or in claims history, it does change the way that business happens. Mm-hmm. So the Hurricane Harvey in 92, when it hit, they changed the way insurance companies modeled. They were like, wait a minute, we need to change our distribution, because you would have the companies that get affected the most are localized regional companies, where you have 90% of your exposure, 90% of your policyholders are all in this area. Mm-hmm. And so then when the hurricane comes through, you're like, oh my goodness, like 90% of our policyholders are filing claims. And so our pool of reserves just sucks right out. Mm-hmm. And so it becomes difficult to manage your risk on the company side when you have that happen. So it changed the way that companies modeled and started looking at, we need to diversify our risk geographically, so that way you're not going to have one event that can wipe out all of your company resources.
Right. Yeah, that's interesting. I wonder how that works over the last two years, or three even probably. We've seen companies really adjust their underwriting rules or guidelines or their geography of where they're insuring because of fires. Mm-hmm. And that's already been a big impact. California fires, here in Washington, we've had different insurance companies look at different areas in a risk factor. And you do wonder what the impact will be now with California in a really major way.
Yeah. So that was the part that was interesting. So I was talking, we were on a call and they were talking about that with underwriting and whatnot. So like one of the things that, just real quick, like, cause they have been doing a lot of underwriting and re-underwriting and looking at the risk distribution and going, hey, we don't want to insure these homes because of the wildfire risk, which we are seeing in Washington and Eastern Washington. In California, it's been a bigger issue. And companies have been non-renewing. State Farm, I think, non-renewed like
it's been a big
30,000 homeowners policies, right?
Yeah, that's been a big like news outlet.
Yeah,
like State Farm's getting just beaten up for that. I was talking to someone about that, which was I was like, they've been planning this for a while though. It's not like they just decided a month ago to cancel everyone.
Right.
Like it's been like a 2-year conversation. An ongoing.
Talking to multiple CEOs that we've had come through our company, they've been looking at the fire line risk in California, trying to mitigate it. Like the conversations that I've been a part of for like 5-6 years.
Yeah. So it's funny the news outlets make it sound like
it was. I mean, it was definitely convenient timing, right?
Yeah. Hey. But you think about it, 5 to 6 years that you've been involved in. Think about like it's probably another year corporate's been having
I'm sure it's been at least the last 10 years that the companies have been looking at it going
like how do we
there's an issue. And well, you look like the North Palisade, like the homes that were there are beautiful homes. Like they had some not so beautiful homes as well, but there's a lot of beautiful homes there that the replacement cost on those things are, $1, $2, $3 million. I think the average was like 2.8 or something like that. That's something I heard, but So, and I tell people, like, if you have a total loss, if we have home, unfortunately, we've had some homes in our customers that have burned to the ground. To rebuild the house, if the coverage on the dwelling amount was around $500,000, the total payout is over $1 million.
Wow!
Because you have personal property, loss of use, building codes. There's like so many different ancillary coverages that come into play. It's not just the building amount. It's everything. So if you have a homeowner's policy where the replacement cost on the house is, $2.5-3 million, your claim is going to be probably $6 million
for the one house.
Yeah. And so the concentration of risk from an insurance company standpoint is huge. Yeah. And so a lot of companies have been taking underwriting actions, building up over the last few years. And then some of the companies have been a lot of the companies have done non-renewals recently, which has created some hard times for customers.
Right.
So I just a segue, just real briefly, because you see people on the news and they're like, my insurance company non-renewed me with no notice. And now I'm without insurance. Right. And it is possible that they are without insurance.
Right.
I'll tell you, insurance companies cannot non-renew somebody with no notice.
Right.
That's illegal. The state requires them to send a minimum of 60 days notice.
Right.
So if your policy is getting canceled because the company's pulling out of that area, they have to give you minimally 60 days notice that your policy is going to be canceled. Now, if you didn't get another policy in place inside of that 60 days, then you are without insurance. And so it's like, my insurance got non-renewed and I don't have any insurance. That's terrible.
Right.
But it wasn't like the insurance companies just saw, there's a fire coming, quick, cancel everybody.
Right. In probably the lack of, or due to the time of age we're at right now, I think a lot of people read that headline of like State Farm canceled or non-renewed. And that's where they like leave it at. And I think they have this idea of like, they just canceled overnight.
Right.
They decided 10 days ago that you weren't going to renew your policy. And now you're hooped. And it makes it difficult. Like we've done some business in California for houses and stuff. And it is difficult depending on where you're at, where then you have to either get the state fire insurance that isn't easy to pay. It's expensive. And so it can make it difficult if you don't know how to navigate. I just got non-renewed. And what does that look like? And so, yeah.
Yeah, the California Fair Plan is that state insurance. So you can get coverage through them. They'll issue it. It's almost guaranteed. There's very few criteria where you wouldn't. And their policy isn't amazing.
Right.
And there's a lot of options that you have to opt into, because the default base policy is a very basic policy. If you're not careful, you'll end up with ACV, actual cash value. So it depreciates. It doesn't default you to, what you would normally expect from a premier company. Right. So I understand there's going to be a lot of people who are uninsured and underinsured. So there's definitely a lot of loss problems there.